Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Alan Wargent Property Buyers, and I'm here with Chris Bates from the Flint Group. G'day, Chris. How's things?
Things are good, Pete. It's obviously my boy's 3-year-old birthday tomorrow, so I'm taking the day off, and we're going to do some high ropes. Little challenge for him. My daughter did that on her 3rd birthday. You can't do it till you're 3, so looking forward to that tomorrow. And 4 weeks till I wrap it up at Christmas. We're actually driving down to Melbourne for 3 weeks and doing a week of camping down on the Great Ocean Road. So head down, bum up for the next 4 weeks, and then actually enjoy a bit of a break over Christmas. What about yourself, mate? Where are you at in your journey?
Oh, Great Ocean Road. I think I had my honeymoon down there a few years ago now, but it was pretty blustery as I remember. But it's a beautiful stretch of the coastline and the country down there. I've been actually down in Sydney this week, just meeting up with a few people. I think the general vibe seems to be people are just tightening up a little bit on spending, on school fees, and maybe just thinking about tilting their property market strategies more to improve cash flows. But I mean, overall, though, the economy seems pretty vibrant. Loads of backpackers around and tourists and international students. So, I've been reading a bit about the property market slowing in Sydney and Melbourne. But that having been said, we've missed out on maybe 3 or 4 auctions in Brisbane over the past week and a half. So there's still a bit of life in the market for the A-grade stock, that's for sure. But I think people's thoughts are starting to turn towards December and Christmas now.
Yeah, I do a little bit of a monthly update for sort of our newsletter, and I had to put that together yesterday. And I can see that back from really late September to sort of middle of October, that you could see when rate expectations really changed. Our buyers went from being quite proactive, right? When expectations really dropped. We saw some really, keenness and eagerness from our buyers to buy in September, but that sort of slowly waned over the last probably 6 weeks as, global tensions, rate expectations have gone back up, and just buyer fatigue at this time of year. I mean, listings are pretty much all over now, right? And but it's actually an interesting time to buy. I think, some buyers absolutely go, right, there's nothing on the market I like. I'm just going to focus on spending my weekends and going to Christmas parties and enjoying this time. But some buyers actually stay quite, patient, and they stay sort of proactive in the market. And I can think of 2 clients who have actually just bought this week where that's paid off for them because, they actually bought places that were getting ready for sale in January and February, but they just got a bit of a sniff of them through a buyer's agent. So, that's sort of where we're at in the cycle. I think it's also an interesting time for us because you'd think it'd be quite quiet, but it actually at this time of year, a lot of people start thinking, well, I've got an opportunity now. Work's a little bit slower, and just to get some thinking in about some numbers on what we can discuss over the Christmas break and what we might want to do next year, whether that's upgrading, renovating, buying an investment, etc. So that's what's keeping us busy.
You're right. It is an interesting time of year. I mean, we're hoping to maybe sneak a couple of purchases in this side of Christmas, but there's not many new listings coming on now. A lot of what goes on is jostling either, pre-market stock that hasn't been prepared for sale yet, or some of the things have been on the market for a week or 2. There's an opportunity to get them locked down before Christmas. But generally, there's not so much new listing stock coming on right now. I think generally the news... we'll come on to the 3 stories of the week momentarily. But there's a lot of stories about, potentially home building is picking up a little bit, but in Sydney, it's just completely stalled. Housing Industry Association reported this week that home building's increasing everywhere but Sydney now. Just generally, things are just on a sort of long, steady recovery from the pandemic. I saw Brisbane Airport had its busiest day since the pandemic, and the arrivals and departures figures showed the tourism figures are continuing to recover. So I guess that's the general vibe is the economy is sort of a lot of parts of the economy are just picking back up to where they were. Stock listings overall are still pretty low in the property market, but they're almost like in a limbo period now until we get the first rate cut, which might be February, it might be March, it might be later. But in the meantime, it just seems like there's a lot of pressure building, not much being built. Population growth still very close to record highs. And the construction industry or the home building industry is still in a sort of a state of flux or a bit of crisis. So they're kind of in a bit of an air pocket, if you like.
Yeah, I mean, one thing we're not going to talk about today, but I'll put you on the spot, is actually got it from your blogs. It's just really the migration numbers. It's, everyone was sort of blown away with how big it was last year, but 2024 shaped up to be another big year, hasn't it, Pete?
It has. I mean, I think the AFR actually did a piece on this saying, look, over the period January to September, we're tracking actually very, very close to the record highs of last year. I guess, we got something like, 300,000 plus over that period. I think if you look, though, there was a bit of a policy change in the early parts of the year to try to slow down the number of international students. It hasn't really all flown through yet. I think if you actually were looking at year on year, yes, net permanent and long-term migration into Australia, 449,000. So it's a bit lower than it was back in February when it was nearly 500,000, but it's still, in a historical context, if you throw in the sort of the natural growth of the population, which is somewhere between 100 and 150, we're still running at extremely high levels. And I think it's starting to become a major issue for the looming election. And I suspect you'll see over the coming weeks, the opposition, the coalition party will be saying, we're going to take a different stance on immigration because Labor has promised to cut numbers and it's taking a very long time to flow through. The international students numbers, I mean, we still got another plus 30,000 in September. And there's actually still a backlog of 100,000 or so in the system. So I think eventually we will see these numbers slow down. And we've been saying that for quite a while, actually, to be fair, on this podcast. But it's just taking time to work through the system. And there's quite a backlog there as well.
What's your thoughts on not enough Aussies going around, traveling the world to get work experience and, going to the hubs, the Hong Kong, Singapore's, London's, over in the States, etc. Do you think that's also leading to a lot more people staying here versus, going around the world for work?
It definitely was a thing. If you can actually check this out on my blog page because we do a monthly update. But yeah, certainly through 2020 to 2022, there was just a huge dip in the number of people who felt confident enough to take a long-term move overseas. It is gradually recovering, though. But you're right. I mean, Hong Kong, for most Aussies, has come out of the equation in recent years. Did definitely a big change in the dynamic over there. Funnily enough, I'm going to Kuala Lumpur in a few weeks, which will be the first time in a few years. So that's one of the popular hubs, I guess, alongside Singapore, Dubai, Abu Dhabi, and some of those other places where you don't pay so much tax. But yeah, I think the numbers are recovering, in fairness. It's just we did go through a big lull for a couple of years because of travel restrictions.
Yeah, I mean, the next election's going to come around fast, Pete. But while we're on election topic, there was a big one. Probably the biggest one of the year was last week. What's your thoughts on what happened?
Well, let's go through our big three news stories of the week. So I guess this was the first one. So I think when we finished up recording last week for 2 cents, it was probably the day before the polls closed. Well, as it's transpired, we got a Republican victory. I think what markets quite enjoyed was that it was decisive. So we're not going through months and months of recounts or contested election procedures and stop the steal and all of the concerns about a smooth transition. Well, the transition is, to date anyway, been very smooth. And I think from a market's point of view, that's quite buoyant. I think there's a bit more clarity about what's going to happen ahead. I suppose the main concern is that if the US was to go down the route of introducing tariffs, then that could cause a burst of inflation. I suppose you might argue that it might be a one-off boost and it's not an ongoing thing for inflation. But at a time when markets are a bit twitchy about inflation anyway, that could be a potential concern. And certainly, actually, if you look at bond yields since the election, they have increased a bit, not enormously. I suppose a lot of this may have been priced in anyway. But I suppose as well, you could argue that at least a part of that is potential growth upside. I guess what the Republicans are going to be running on is reducing regulation, reducing government waste. There's, I guess, very high levels of government spending in the US and many other countries. So I guess I saw my buddy James Aitken was in Sydney this week. A lot of global fund managers there talking about how to position themselves for the Trump trade, if you like. And James did a speech there, and which was very well received by all accounts. And I think, there's a few sort of potential outcomes. I guess an unpredictable president, but I guess the big picture is that interest rates have come down almost everywhere else among our peer group countries, but not in Australia. We're like this long flat line, while other countries have been coming down the other side. And just finally, on the day of recording, US inflation was 0.2%. So that sort of sets up for another interest rate cut in December for the US.
Yeah, I mean, we were a bit late to the party in terms of lifting rates, and sounds like we're going to be a bit late to the party to cutting rates. I mean, my take on this, Trump, is it probably increases uncertainty around where inflation is going, right? And if people are worried about where inflation is going, then that's also being a little bit more cautious with interest rates. And so do you think, Pete, though, interest rates are probably going to stay a little bit higher for longer potentially? Or even if it doesn't happen, I think that's what maybe people are feeling. And when people feel that uncertainty, they less want to transact. And I think this is going to really slow down new listings in January and February. I think usually that would be a good time for agents to be going around and, making all their calls and trying to figure out who wants to upgrade. And a lot of sellers do want to sell before they buy, even though it does make often sense to buy before you sell through long settlements. But a lot of sellers want that clarity. And so a lot of sellers don't list on the market because it takes many months to get their properties ready and pick an agent and style it. And so any uncertainty is not great for listings. And so I reckon this is just going to lead to a really dire listings market in autumn next year, because listings usually happen in two waves, right? Autumn and spring. And, if this sentiment continues on until sort of January and February, what's going to happen to global trade? What's going to happen to inflation? And there's not a rate cut. Well, a lot of sellers would just say, well, let's just wait 6 months and rethink about it in July. I mean, that would be my take. And if, while buyers are absolutely sitting on the sidelines, every year a buyer sits on the sideline is just more pent up demand, right? They need to get out of the apartment more. The kids are getting bigger. More people are getting married. They're having kids. The housing needs growing, right? And it's not matched to the right property for them. And, I think that would be my take on the Trump, how it could impact property markets here per se.
I think you're right. I mean, I think people have been talking about interest rate cuts in Australia for a long time, but I think it's definitely a case of seeing is believing. And until the Reserve Bank literally cuts interest rates by 25 basis points, I think a lot of the market reaction will be very cautious. I think if you look at, there's been a bit of confusion about government bond yields, because Australia's 3-year government bond is now trading back above 4%. Which the face value, people are saying, well, maybe that means no rate cuts. But I think if you actually look at market pricing, OIS pricing, we probably are going to get some cuts in this cycle, but it may not happen now until, who knows, June, July. I think August is the first month where you've got a full cut and fully priced in. But maybe as well, that cutting cycle is maybe just 1.5%. So maybe the equivalent of 6 interest rate cuts. So potentially a lot shallower than what we might have said a few months ago, that's for sure. And yeah, maybe just some risk of with a change of presidents and maybe tariffs being introduced, disruptions to global trade. Well, maybe that could spark some more concerns. I mean, generally speaking, the domestic figures in Australia haven't been that bad. The NAB survey was out this week. Price pressures seem to be ebbing away. Job ads are kind of trending lower. There's a lot of things that seem to be going in the right direction for Australia, but I think a lot of this is internationally related, and a few concerns about, do we get another burst of inflation in 2025 from issues that aren't really related to what we're doing down under?
Yeah, I mean, it's a long time between middle of November and middle of February, and I think that's when we're going to really see how the market and sentiment can shift so much in 3 months. 3 months ago was August, and rates are going to be higher for longer, and then they collapsed and rates are going to cut, so almost coming, and now they've gone back the other way. And so in 3 months' time, it'd be interesting to see how business confidence is and consumer confidence, and where rate expectations are, and and if anything surprise us with in the global economy, and really the market's sort of dead now really for the next 3 months in terms of new listings. And what you can find is that mismatch happens, right? We could see a lot of buyers come back. A lot of buyers get new energy over Christmas. They get refreshed. They come in and they're really keen to buy in January, and then they get disappointed because low listings, or they miss out on a cracking listing, and then a little bit of FOMO gets in the market, and prices can run quite fast in a month. We find in January and February.
Yeah, I think it's always the case that the demand for housing can change a lot more quickly than the supply tends to. And that's both up and down. And if you get a flood of people coming in to buy in, say, late January, early February, and at a time when there's not much in the way of stock, then suddenly that can create a bit of a run. Let's take a look at this second story, Chris, because there's a few conflicting views and think pieces out there. So mortgage arrears were rising per National Australia Bank. So NAB put out their latest investor report. Arrears were rising for both 30 and 90-day delinquencies, basically the highest since 2020. There was a bit of a spike during the pandemic there. And there's a general sort of thought, I suppose, in NAB's figures that arrears could go higher from here if interest rates stay on hold all the way through this year and potentially some way into next year as well. I mean, it's interesting because whenever I share articles like this, people will always say, well, you guys said you should loosen borrowing standards, and people overstretched when interest rates were low, and you shouldn't have been pushing for that. Look, I guess whenever there's a policy, there's always two sides to what goes on. I mean, we went through a very exceptional period where we had border closures, we had no immigration, a huge amount of uncertainty. Interest rates went to zero. And I think actually there's a pretty good argument to say that if you're going to have interest rates at emergency low levels, then that interest rate buffer should be flexible, because one would assume interest rates are not going to stay at zero forever. But I suppose the other thing was it was a very unusual period. But also I think the counter argument is if you look at the number of borrowers in negative equity, it's less than 0.1%. So I guess if you were looking at potential outcomes from the pandemic and what might have been, well, that's pretty good. And also NAB were at pains to point out that impairments are very low, even though arrears have been rising. But I think you mentioned CBA had a slightly different take on this, Chris.
Yeah, I was just reading another article about CBA yesterday, and they said they're not too concerned around their book, and it seemed to be doing quite well. And I think that's what people need to realise, that, yeah, they can write a story. I was on Martin North last week and everyone was going, oh, didn't you see the NAB numbers on, loan arrears? But that's just, even though you're behind on your loan, they're at very, very low numbers, and banks will do everything they can to keep you in the property. And I'm sure even if people are forced to sell, it's into an undersupplied market, and it's not like there's an oversupply of listings. That's not everywhere, obviously, but that would be my take. I think they've sort of said that the margins have sort of been leveling off, was an interesting point. I think as a broker, the mortgage war will naturally have to happen because every bank wants to grow above system, right? You don't want to be growing, maintaining your market share. You want to be growing it, right? And it's growing or dying, sort of the saying, right? And I think at some point, one bank's going to have to step out and say, hang on a sec, we want more market share. We're going to offer some better pricing. Then other banks have to compete. And then all of a sudden we're back in mortgage war territory, which is kind of in the story for the last 15, 20 years as the rise of brokers has been happening. We're at 75% market share now. And while banks like CBA, think they don't need brokers, they do a lot of their loans through their branches and online. A lot of the other banks absolutely need brokers to get new customers, and that we've got the market share. So I think another mortgage war is just around the corner, but CBA and all the banks are a bit happier because their margins were absolutely just getting smashed over the last few years.
It's interesting to think about when you're looking at those arrears numbers, because as you mentioned, they're coming from almost record low levels. So of course they're going to rise. 30-day arrears for NAB, 1.08%. So call it 1% and change. Yeah, it's interesting because when you look at like the major housing market crashes, if you think about say Spain or Ireland in the global financial crisis, well, most people continue paying their mortgages. So it's always worth keeping an eye on what's going on with arrears, because it doesn't need to go too high before that could be the signs of a major issue. But in saying that, if you think back over the past decade, there was a period when Western Australia, for example, in the downturn had 30-day arrears were running at, well, it depends on which metrics and which measures, but maybe say 3% of mortgages were in arrears. And yet that kind of worked its way through. And then the market's now in a boom period. So, yeah, I mean, 30-day arrears are 1% and 1.8%, not 1.08%, and 90-day arrears are 1.08%. I mean, these are still, in the grand scheme of things, pretty low numbers, and they were quite a lot higher during the pandemic spike. So, yeah, it's definitely one to watch. But, most borrowers seem to be getting by. A lot of the conversations I had in Sydney, people are just talking about, well, maybe I'm going to cut back on an overseas trip. Maybe I'm going to cut back on private school fees. I might offload a property that's been causing me headaches. So I think there's a few levers that people are able to pull at a time when the unemployment rate is still close to 4%. So yes, a few mortgages have slipped into arrears, but it doesn't seem to be catastrophic at this stage. Interesting you said about the mortgage wars thing. It seems to me that the two largest banks are actually quite keen on keeping APRA's lending assessment buffer in the same position or the same policy setting. I suppose because they've got the biggest market share already, whereas the other banks are pushing for looser lending standards. So it'd be interesting to see how that one plays out in 2025 as well.
Oh, I absolutely think that, one's market share, but also market is actually credit growth at system. You're right. People who have got the market share probably don't care about too much of credit growth. They just want to make money on their market share, right? And I think, though, we're going to see bank innovation next year. You know, we've already seen a lot of mentality, risk on by the banks. You know, 2018, 19 is when it's risk off. You know, with 17, 18 was probably another time when the market sort of with interest-only lending and, you know, a tax on investment loans was another point. COVID, there was risk off, right? Absolutely. In 2020, when first COVID was happening, banks were like, I'm not lending to all these industries, etc. But absolutely, banks are risk on. And why wouldn't you be when you're only lending at 4.5, 5 times incomes versus say 7 or 8 or even a lot more than that back in 2014? You'd want to lend money, right? And you can see that loans over 90% are starting to creep up as well. And I think banks will be doing everything they can to increase borrowing capacity. So I think a lot of innovation will be coming over the next 12 months where banks, you know, come up with new policies that can increase how much money they can lend, not just to property owners, but business owners and commercial, etc. The banks definitely want to try to grow their loan books.
Well, you're right to the coalface for that. So definitely keep us posted on the podcast with changes and policy shifts from banks that might just change the lending landscape. Because I often say that the first people I want to speak to about market changes are mortgage brokers and buyers agents, because they see these trends ahead of time. And by the time it gets reported in the price indices, it's often old news. So it'll be interesting to see how that plays out next year. Chris, let's finish with the third story. Sydney and Melbourne house prices are falling. Leith Van Onselen, a macro business. I think a bit of context here. I think if you look at the total number of property listings from a year ago, SQM has nationally property listings are just slightly higher, about 4% higher at around 253,000. So that's not much, but it's largely driven by Sydney, 13% higher than a year ago, and Melbourne 12%, and actually Canberra as well, and Hobart. But if you look at other parts of the market, though, Brisbane listings are down 4%. Perth is way down 19%. Adelaide and Canberra also down 14% and 17%. So I think, yes, it's Sydney and Melbourne where listings have picked up more so than other parts of the country. And I think that's also reflected if you look at price indices. So the quarterly growth in property prices has slowed to 0.9% over the quarter and 6% over the year. Again, Perth and Adelaide still absolutely rampaging along in the past 3 months. 3.5% growth for Adelaide, 4.1% growth for Perth. Brisbane's still doing 1.9%. But then Sydney nearly flat now, and Melbourne actually going backwards 0.7% over the quarter and 2.2% over the year. So I suppose you could always say this. There's definitely different things happening in different parts of the country. What do you think is happening in Sydney and Melbourne? Is this just the bigger mortgages in those cities just starting to bite a little bit?
I think it's a bit of a furphy, this one, Pete. I think year-on-year change in listings is a pretty poor metric, and it makes great news articles, but it doesn't really stack up when you do a bit of digging on it. I mean, just using SQM, so using the same research house, someone just jump in right now, type in SQM research, type in, property listings, you bring up Melbourne, right? And you can see that absolutely, but listings last year were pretty much the lowest they've been in the last decade. So, you can't say, yeah, it's gone up on last year, but it was off all-time, decade lows. And, there's probably roughly about, you say Victoria, in Melbourne, maybe about 25,000 listings in houses. Well, if you go back to 2013, there was 35 houses. So, it's 50% more listings back then in houses, and apartments are, there's a few more apartments on the market, but ultimately it's been sort of hovering around, over a longer term, it's probably at the highest points. I think that's a lot of investors bailing, it's probably around, 12 to 15,000 apartments on the market. So I think that's when you break up, apartments in that, you'll see that. I mean, if I just quickly flick to Sydney just to have another look, and you can split it by houses and apartments, which is interesting. Houses are still pretty low. They're nowhere near like I was in the market in 2018, 2019, and similar numbers to, and then apartments, there's a few more apartments on the market as well in Sydney. And so I think that's really the story here, is some investors bailing in Sydney and Melbourne, and that makes the overall listing numbers look high. But if you look in the housing market in these cities and versus long-term numbers, I don't think there's an oversupply problem. Those cities are much bigger than they were 10 years ago, and pent-up demand's only greater, right? Less ownership per, over generations, and more people stuck in properties that don't suit them. And so that would be my take on these stories around listings, Pete.
I think, to be fair, there's a few things going on, isn't there? I suppose the volume of auctions was very high for the past couple of weeks, maybe 1,500 auctions across Sydney and Melbourne or thereabouts. It fluctuates by the week, but it's a big time of year for auctions. So there is a bit more choice anyway for buyers at this time of year. I think as well, on the apartments piece, I think it's not right across the board, because some apartments have done really well, but there'll be some underperformers. And I think just over the past 6-12 months, a lot of people have been telling me that their insurance, for example, has gone up maybe 50% in some cases. In Melbourne now, a lot of apartments are subject to land tax. It might only be $500, but it's just all these extra bits and pieces of holding costs. And of course, mortgage rates have gone up as well. So I think there's just a few things that are smoking some sellers out there as well in the investor side of the market. But as you said, I think it is a bit of a pressure cooker situation as well, especially in Sydney, because just nothing's really getting approved or built. I think, in Brisbane, we're seeing sort of home building start to pick up. It's not really keeping pace, mind you, but in Sydney, everything seems to have stalled. So, with every passing month or 3 months and 6 months where there's not much being approved or built, well, it is kind of a pressure cooker situation. I guess if I was to summarize my time in Sydney over the past week, it really is, a lot of people cutting back on maybe retail consumption spending, but the place is absolutely teeming with people. It's just, there's backpackers everywhere, there's tourists, the international student numbers are just rampant. Immigration's picked up again. I think a lot of the big employers are sort of reeling people back into the city a bit more as well with the office space. So, I think, actually the rental vacancy rates were slightly lower again in October. So, I think, we're in a bit of a slow period for the market as some investors sell up. But on the other hand, there's just an underlying shortage of housing being constructed, and that's going to sort of come back to bite in 2025.
Yeah, absolutely. I think the lack of building over this period is absolutely only going to exacerbate our problems. And I think a rental crisis is not going to go away. I think if we keep growing our population and investors don't buy where current investors are selling, which I absolutely think is the case, what our investors were buying 5-10 years ago or they were thinking about buying versus what they want to buy today is sort of chalk and cheese. And so I think we're going to see a massive reallocation in our rental supply. What was any other final stories for you, Pete, that we should cover this week?
Not much. I think I think a lot of the focus in Australia is actually going to turn to the federal election, because as we come back in the new year, you'll see that campaigning starts to ramp up pretty quickly. We might get an election maybe around April, possibly in May. And the betting markets have shifted suddenly in favour of the opposition, I think partly buoyed by the Trump result. And also just domestically some challenges for Australia around the cost of living, high interest rates or high mortgage rates for people in the mortgage belt. Some of the Labor Party policies not really hitting the mark in terms of what the electorate wants to see. So actually the bookies at the moment seem to have the opposition as top favourites for the election, which seems like a big shift to me. It feels like maybe a minority government for Labor is the most likely outcome. But I think that's what we're going to see. There's going to be a massive tilt in that direction. And if I had to guess, the coalition will run quite hard on sorting out immigration policies or bringing things down to a more sustainable level. And of course, housing will be front and centre of the policy piece, as it always is.
Yeah, I mean, they're doing lots of stuff around affordable homes like the Labor Party, but I think the thing that the Liberal Party absolutely would increase prices of property, which you'd want to get ahead of, not trying to buy in that market, similar to when Dominic Perrottet was in New South Wales and changed stamp duty to land tax for first-home buyers, is access to super. I mean, that's a huge change if that happens, and a huge opportunity for first-home buyers. And so who I absolutely think will take advantage of it if that's their, they're struggling to get a deposit together and they've got the ability to take a significant portion out of super to get them into the market. I think they'll want to do that. It's just that lack of trust in super. Not that saying they should have lack of trust. End of the day, it's just a structure, and it's a low tax structure that is going to benefit them one day. A lot of people don't see it for what it is. They have a negative connotation towards super, and if they could say, well, I have less super, but I've got a home, a lot of people will take that bet. And I think that's what the Liberal Party end up getting in. That's one of their policies from my understanding. And I think it could have a huge impact on particularly suburbs and locations where first-home buyers enter.
If they can get it through the Senate, yes. And I suppose one of the policies that Labor's proposed, which is a bit of a sticking point, is capital gains tax on unrealised gains in self-managed super, which is causing a few headaches for some people with assets in their super that they weren't expecting to be taxed on. But that's all probably stuff for 2025. A bit of a rebrand at Rask in recent weeks. So come and check out the community forum there, community.rask.com.au. If you're looking for property strategy advice, I'm Pete Wargent, Alan Wargent Property Buyers, and Chris and the guys at the Flint Group are always keen to take your mortgage calls. So I think there's a link there in the show notes you can follow, Chris. And what do you have planned for the weekend?
Tommy's birthday tomorrow, and a bit of a barbecue at our house, which at this stage we're not regretting, but we might be regretting at 5:30 on Sunday afternoon when the cleanup's there. But it should be a bit of fun. We gave him an early Christmas present and got him a trampoline, but it's probably should have went for the medium size because we got the large and it looks like a UFO in the backyard. So it's a children's birthday party at our house on Sunday. What about you, Pete? What's going on?
It's not much different here. We've got some friends visiting from the Gold Coast, so a bit of a play date. Better get the earplugs ready, I think, and prepare myself for the neighbours' noise complaints. But it should be good. And we're still trying to get a few properties bought before Christmas, but we keep just getting pipped to the post at a few auctions, and in some cases we're getting blown out of the water, actually. So still, even at this late time of the year, there's still plenty going on in the property market as well. So that's it for this week. Have a cracking weekend, everyone, and thanks for listening, and look forward to seeing you next time, Chris.
See you next week. Happy Sunday, everyone. Thanks for listening.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.